Welcome back. I'm Pratap here. Today is 26th October 2023. So let us generate supply demand zones for the daily time frame. So before generating today's demand and supply zones, let us quickly evaluate high liquidity zones performance from our previous report. So even before that, today is another bearish day. So even then, we got a very good performance from our high liquidity demand zone from our yesterday's report. We got an excellent intraday, and also even it reached short-term target on the same day. So we found two stocks from our yesterday's stocks near daily demand zones. One is Escorts and another one is VEDL. Escorts, we got the entry. Let's open. So this is Escorts support demand zone. It is a high liquidity demand zone, rally base rally, and it is already tested 3 times, and we need to look for a deep entry, a fresh 75 minutes demand zone. So we have found a fresh 75 minutes demand zone. Let's go to the 75 minutes time frame. Here we found a drop base rally. Drop base rally, 75 minutes demand zone. So within that 75 minutes demand zone, I also found a 5 minutes demand zone. Exactly there we got the entry today. So this is the location. So let me open the 5 minutes demand zone. So here is the origin. It's a fresh zone. So in this zone, sorry, this is the 15 minutes, right? Okay. So this is the 5 minutes demand zone, drop base rally. We have how many base candles? 1, 2, 3, 4. So today's session we discussed about base candle count. Base candles, a zone having base candles above 6 is not tradable zone, but anything between 1 and 3 is an excellent zone, and anything between 4 and 6 is a good zone. So it's a tradable zone. And we got an entry today. This is for the intraday point of view. So what is the target? Here we have a drop base drop. So this supply zone is the target. When we got this entry at 10:15, and when it reached the target at 10:30, so that means within 15 minutes our trade is completed. Do you know how much intraday return it has given? 9,542 rupees, which is 3.75% return on investment. I know it is lesser than our average intraday return 6.1%. But this return we got in just 15 minutes time frame. I mean, in just 15 minutes time period. Okay, if anybody would have gone for a short-term trade means in next 2 or 3 days, mostly our high liquidities will reach the target. If anyone would have taken a short trade instead of intraday, we should look into the 75 minutes time frame. Short trades always we look at 75 minutes time frame. But entry point of view, you can fine tune the zone. There is nothing wrong. But your target is a 75 minutes supply zone. So we have found a 75 minutes supply zone. So this is a ERC candle. So this is our leg in, base and leg out. This is a drop. So basically it is a drop, base, drop. So it's a supply zone. So even today itself it reached the target. So intraday is also completed on the same day. That too, today is a bearish market. Today's market is bearish. In bearish market, this is the performance of our high liquidity zone generated from our yesterday's report. And it has given, it reached the short-term target on the same day. And it gave 27,500 profit, which is a 10.7% return on the investment. Those who have taken the trade in this stock, probably you would have got excellent returns today. Last 3 days, market is very bearish. Even then, our high liquidity zones worked, especially stocks near the demand zones. Previously, also I told you, the stocks near demand zone algorithm works based on some volatility related algorithm. It is a high complex algorithm. Based on that, it is finding the stocks almost near to the demand zone. Due to the volatility factors, at least next day they are giving good results. That is what we have seen yesterday. Even today also we have seen. And VDL, we didn't get the entry. It is yet to reach the entry. But still, we need to observe something from that particular stock. It reached the demand zone. It is entered into the daily demand zone. But we fine-tuned a 75-minute zone. So let me open VDL. Let us learn some important points from this stock. Vedanta. Let's go to the daily time frame first. So this is a drop base rally. This demand zone is a drop base rally. So this is a high liquidity zone and it is a fresh zone. First time prices entered into this zone. And where is our 75 minutes? Deep inside. You should ask a question. Generally, what is our rule? We take entry first time when prices are entering into the high liquidity zones. We take entry almost at the high of the zone, this zone, because this is a demand zone, at the high of the demand zone. Most of the time what happens in high liquidity zones, they just reach and touch this zone high and immediately they go back. So immediately you should ask me a question. That means we have to fine tune a 75 minutes near the high of the demand zone. Why did you fine tune at the bottom of this high liquidity demand zone? That is deep inside. The reason is, I don't want to tell, you itself look into the 75-minute zone, you get the clarity. Let's go to the 75 minutes time frame. Okay, now this is 75 minutes time frame. Now you tell me the reason. So at the high of this demand zone, do we have any zone? Previously we have a zone here, but this is just little above. This is little above. Do we trade above the high liquidity zone? No, we never trade above the high liquidity zone. That is our rule. We've been following that rule. See, there is a gap between this 75 minutes demand zone and the daily high liquidity. That's why we cannot trade here. Previously, this 75 minutes demand zone, which is above daily high liquidity zone, gave some rejections. So it is acted like a entry buffer. This demand zone is acted like an entry buffer for some trades. So today is a bearish day. So much of supply. So all these stop buffers. That means this demand zone is violated. But already previously it gave good returns, intraday returns. But anyway, our interest is not on this zone. What is our interest? We didn't find any 75 minutes demand zone near the high of this particular daily high liquidity demand zone. So where is the 75 minutes is available? Deep inside it is available. So that's why we have drawn. And one more point. What kind of zone it is? Yesterday's training session we learned. It is a professional gap. See here. Draw base rally candle with a gap. I have drawn a blue color line here. Have you noticed it today? Today is a bearish day. See how there was a drop, heavy drop in the first 75 minutes. After that, prices try to reach near to this professional gap. And how it is resisted today? A strong resistance it has given for the supply. Probably the institutional pending orders in this area has given a strong resistance to the supply. Even on a bearish market day. So that's why the prices didn't come here. So this is the reason why we didn't get the entry. But what about tomorrow? Is it going to give an entry? That we cannot tell. So tomorrow market is having different dynamics. The volatility conditions are different. Yesterday we found the stock near demand zone. Now it is no more near the demand zone. Now it is inside the demand zone. Prices closed inside the demand zone, daily demand zone. So as per yesterday's report, the validity of this stock is over, but still it might work. That is a different scenario. You should also consider the overall market. So we didn't get entry on VEDL. And one more point you should ask me. Yesterday we discussed a few stocks. We got an entry in ICICI Prudential, excellent trades we got yesterday. Twice it has given the entry and both gave good profits. But ICICI Prudential is broken because there are no more fresh zones. We already learned if there are no more fresh zones, high liquidity zones will fail. Already ICICI Prudential has given nearly 4 or 5 times entry it has given so far. So because the market is bearish, institution did not create any new demand zone inside the high liquidity. If they would have created a new demand zone inside that high liquidity, next time again prices enter into that high liquidity demand zone, again it will give another profitability for us. But now institutions might have decided not to create any more new demand zones inside ICICI Prudential because it didn't have any fresh demand zones. The stock is violated today. Let me show you. But anyway, yesterday we got a good intraday entries on that stock. Previously it has given an entry deep inside almost. Then it created a new fresh drop base rally, and yesterday it gave an entry and gave excellent return. Again it gave second entry yesterday, again it gave excellent intraday return. And today what happened? It went inside, and before that we didn't find any zones here. That is below this point, there are no more zones within. So prices easily passed and violated. Actually, it is not violated completely. This zone is pierced. Probably tomorrow it may go down, tomorrow or next trading day. But we already know pierced zones cannot be traded. Pierced zones are not tradable. Except Nifty and Bank Nifty only, we take some exemptions. We take high risk and we look for the trades. But in the equity stocks, we don't look for the trades. That is our rule. And one more important lesson you will be learning from what is that stock? Bata India, yeah. Bata India. Bata India is violated today. When we got this Bata India entry, not yesterday's report, day before yesterday's report, we got this entry. Then why I am evaluating this? The reason is we have an important lesson from this Bata India. So everybody should learn that. This lesson will tell you why this high liquidity zone is violated completely, even though it is a fresh zone. Look into this. It is a fresh zone. Mostly we get success in fresh high liquidity zones. At least once a minimum it will give. At least intraday it will give some achievement. But today nothing it has given. Maybe some resistance today from this location. Again there was a rejection, some fight here, then later again it reached. It is not actually violated or even pierced, but almost consumed all the order just before the distal line. Just before the distal line, maybe just 1 rupee before the distal line. Mostly tomorrow we may see a clear violation unless institutions decide to create a new zone here, because we have a drop, we have a base. Tomorrow if they create a rally candle, what happens? Again a new demand is created. Next time when prices enter into this, we will get a chance. Okay, fine, that is about the future. But why at present it did not work? What is the reason? How can a fresh zone will fail just like that so easily? If you want to understand, you should understand the importance of top-down analysis. I've been telling all these days, top-down analysis always gives clues. Based on the clues, we can identify the success of any zone. Maybe, I don't know whether you learned these points. Top-down analysis will give some clues. Those clues will tell you really a zone works or not. At higher time frame, the zone will work or not. Assume your daily time frame is higher time frame. So what is your lower time frame? At least one time frame lower, 75 minutes. If not 75 minutes, one more lower, 15 minutes. So when you do top-down analysis, they will give you some clues, price action clues, or supply demand zone, price action theory concepts related clues. And they will tell you the success of this particular zone. So let me tell you why this zone is failed. So I'm going to the 75 minutes time frame. Do we have any 75 minutes zone here? Yes, we have a rally candle. That is a leg out. We got a good leg out. Where is the base? Here we have, this is a leg out, we have a base. So 75 minutes demand zone, we can fine tune to type 2 proximal line. Okay, you may say risk is high. If risk is high, what you do? You will try to fine tune at the 15 minutes or even 5 minutes level. But even before that, is it a tradable zone? So it is a coincidence that today, during my training program, I have explained about zone strength and base candle count. How many base candles this zone is having? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 base candles this 75 minutes demand zone is having. 9 base candles. During today's session, I clearly explained the reason behind, if a zone is having more base candles, what will happen? I explained the reasons in a clear manner. If base candle count is increasing, keep on increasing, who will be the reason for the market movement? Is it institutions or is it the retail traders? We can also say novice traders, professionals or institutions. And more base candles are there. Institutions are not required to push the market. Our retail traders push is more than enough to push the market. The reason is, in all these base candles, both demand and supply, they are fighting in a range. See, each candle they are passing. See, here there is a fight between bulls and bears. By the time it reaches second candle, some of these orders are consumed. When there is a fight between, when there is a equal demand and supply, buyers are keep on buying, sellers are keep on selling. By the time the first candle completes, at least some percent, let us say at least 10% of their total orders are consumed, both demand and supply. Second candle, another 10%. Third candle, another 10%. Fourth, another 10%. Fifth, another 10%. Sixth, seventh, eighth, ninth. That means 90% of their total orders might have been consumed for both buyers as well as sellers. At this point, institution is not required to push the market. All the retail traders, if they place the orders, buy orders here, market will go up. It will push up. Or if they place the sell orders, the market will go down. This is what I explained clearly in today's session. That is the reason why if the base candle count is more than 6, we cannot trade that zone. We are considering them as a weak zones. Because this 75-minute zone is a weak, obviously there is no meaning in fine-tuning at the lower time frames and looking for a trade. If you are looking for a trade in such kind of zones, it is almost like a suicide attempt. Right? So by knowing this zone will fail, do you trade in the market? Do you take a risk for trade? Because you know that this zone will easily fail. That is what happened. Even though it is high liquidity zone, but high liquidity zones are not exemptions for the fundamental concepts. High liquidity zone will ensure there will be more pending orders provide all the fundamentals are taken care. What is the fundamentals? The basic price action theory concepts. If they are against and you are saying it is a high liquidity, it should give success, it doesn't make any sense. That's why high liquidity software is indicating. But the quality of the high liquidity You have to do your minimum homework. That is what we are doing. Every day, every day I've been analyzing high liquidity zones. Why we are looking for a fresh zones inside the daily high liquidity zones? Because that is the area, if you find fresh 75-minute zones, we get higher success because it is a high liquidity zone. High liquidity zone indicates institutions will keep some good orders. Why software identified then this a weak zone? Because software is analyzed based on the daily time frame and the conditions matter. But it is our responsibility to select the zone for our trading purpose. For that, we define some rules. So before taking the trade, every time you need to cross-check all our rules are satisfied or not. If they are not satisfied, we don't take the trade. So that's why always you need to do some manual effort before finalizing your trade. Because the software is giving you the list in a blunt manner, you cannot take the trade. Otherwise, why so much of analysis is required? Why every day we are spending so much of time? I am spending my time for recording this video. You are spending your time for listening this video. Simply, you can take the report and you can look into the zones and in a blunt manner, you can take a trade. But we are not doing that. You have to understand high liquidity zone is a reference. It indicates there is a possibility that we get higher success. I never said high liquidity zones will give 100% success. Always I am telling their success rate is 90% or more than, 80% or more than 80%. Between 80 to 90%, they will give success. They are having the success rate. That is what we have experienced for the last 2 months. Even then I say the success rate is 80%. That is a safe approach. Hope you understand the reason behind the failure of this. Today only I published the second part of lesson 6. There we discussed about the base candle. Exactly the same concept was applicable during our today's trading session. 9 candles. That's why we should not look for this stock at all. We know that easily it will go through. So finally, it is broken. Completely violated. Prices closed outside this zone. So this is one important learning from our today's session. But on the other side, we have seen a very good success for the stock we identified yesterday. And VEDL, we didn't get the entry. Otherwise, if you would have got an entry, maybe definitely we would have seen a big rejection from that demand zone. At least intraday target it would have achieved. But tomorrow, we don't know. We cannot give the guarantee. So this is about analysis on previous stocks and some important observations what we learned from these high liquidity zones. And we have one Torrent Pharma short stocks near the supply zone. It didn't give the entry. So only one trade we got executed and that gave excellent, extraordinary return during the intraday, as well as a short-term return also given during the same trading session. So let's go back. Let us generate the demand and supply zones for the daily time frame. Entry time frame is daily. Let us find the stocks which are near to the daily demand zone. So total 7 stocks are listed. Are there any high liquidity demand zones? HDFC Bank is nearing to the C_DZ. But remember, C_DZ is very powerful on monthly time frame, weekly time frame, even quarterly time frame. From daily and below, its strength is less. Still it works. Its strength is less than S_demand zone. S_demand zone is having higher priority. Compare it to C_DZ on daily time frame and below time frames. So that is the reason why, even though it is a fresh zone, Be careful because market conditions also not good, but don't underestimate high liquidity zones. And it is a fresh zone. But you need to fine tune the zones in the lower time frame. You need to check the quality of the zone in the lower time frames. Today we have seen the quality of the time frame is very poor for Bata India. If such kind of scenarios are there, you need to exclude that stock from your trading plan. And we have one more high liquidity zone, Kotak Bank. Look into this stock. So far 11 tests, 11 rejections. And it is low on the curve. The stock is low on the curve. Actually, the stock is there inside the monthly demand zone, and then inside the weekly demand zone, this zone is there. You might be knowing the concept zone confluence. If lower time frame is inside the higher time frame zone, that is called zone confluence. So we have a monthly demand zone. Inside the monthly demand zone, there is a weekly demand zone. Inside that weekly demand zone, you can find this zone, this particular high liquidity zone. That could be one reason for this higher success. 11 times it entered into the zone and 11 times it worked. And see, this is not a pierced zone so far. So if you want to trade, what you have to do? Either you have to go deep inside if there is any option available. Otherwise, you should look for a fresh 75 minutes newly created demand zone, which is not tested. Fresh means it is not tested. So we might be wondering how we missed this stock all these days. Actually, we didn't miss. It's been running from the, this zone is working from 2021 onwards. Almost for the last 2 years. When prices are entering into this zone, it is pushing the prices up. And let me tell you one more, let me give you one more clue here. The monthly demand zone, the stock is inside the monthly demand zone, right? That monthly demand zone is also a high liquidity zone. I have already analyzed this chart. So I'm telling you, but the reason why I'm not showing is I cannot show you the trades. It is your responsibility to finalize the trades because I don't have the authorization. I can analyze the stocks after its completion. But you have to analyze because I am not an expert to recommend. So this is about stocks near daily demand zone. We have two high liquidity zones identified here. So let's go back. For entry time frame daily, let us find the stocks which are near to the daily supply zone. So this is the list. We have Balakrishna Industries, already tested 5 times, 15 rejections, high on the curve. Look for the deep entry or fresh zone, otherwise don't take the trade. Previously, I think we analyzed Balakrishna Industries for one of our previous trades. I am doubtful whether there is any fresh 75-minute zone is available. Check. If it is available, you can take a trade. HCL Tech. Already we took a trade yesterday. It gave intraday return, excellent return intraday. Those who have taken short-term trade also, you would have got excellent return today morning hour itself. HCL Tech. Whatever the intraday return yesterday it has given, double the return it has given yesterday. Today. For short-term trade. Intraday we didn't get entry today, but now it is nearing. So tomorrow, if you get an opportunity and if you find any fresh 75-minute zone, then only you take the entry. Don't deviate our rules. Lupin is also there. It is a fresh zone. It is a fresh zone, not tested, no rejections. And also it is high on the curve. Look into this stock. Interesting. But you need to fine tune to minimize the risk. See the risk 2.66. You can't take the trade. You have to minimize. You have to fine tune to 75. If that is having high risk, then again inside that you need to fine tune to 15 minutes or 5 minutes. So these are the high liquidity stocks near daily supply zone. So let's go back. Let us find the stocks which are closed inside the demand and supply zones. Entry time frame is daily. Let us filter the stocks where price closed inside daily demand zone. This is the filtered list. Oh my God, even today also 90 stocks are inside the daily demand zone. We don't know how many demand zones are pierced already here. There is no pierced count, you can expect another fall in the market. But we don't know, we have to wait and see tomorrow. So let's go back. Entry time frame is daily. Let us find the stocks where price closed inside daily supply zone. Only 3 stocks. Let's go back and find the tested zones. Entry time frame daily. Let us find the tested daily demand zones. Good number of daily demand zones are tested today. Nifty Bank also tested the high liquidity zone second time. But there is no push from this zone. The reason is it is already tested once. And another reason is the C underscore DZ are having less priority compared to our support demand zones on daily time frame. Total 62 demand zones, daily demand zones are tested. For daily time frame, let us find the stocks tested the daily supply zones. Only one stock, Trent. Let's find the newly created demand and supply zones. Daily time frame, let us find newly created demand zones. Only one is created. That is also Trent. As a demand zone is created and then went into its supply. Let's go back. For entry time frame daily, let us find the stocks having newly created supply zones. So today is a bearish day. Obviously, we can expect good number of newly created supply zones. Total 30 supply zones created today. We have many Nifty 50 stocks here, UPL, TCS, State Bank of India, Reliance, ONGC, Nestle, Maruti, M&M, Grasim. My God. Okay, this is about filtered list. So let me generate demand and supply zones for all the stocks for our reference purpose. So entry time frame daily. So this is the list. I will keep on scrolling this list. Whichever the stock you want to refer, please pause the video there. This is the complete list of the stocks. Hope this information is useful to you for your further study and analysis. Let us all meet again in our next video. Thank you.